Thank you for joining us today. Thank you for being part of the first webinar of the fall for the Center for Financial Security at the University of Wisconsin-Madison. We hold these webinars on a regular basis to translate research for the field of practitioners and for consumers with a focus on financial decision-making among vulnerable populations. Today, we're very happy to co-host this webinar with the Center for Financial Services Innovation, or CFSI, and the Hudson Institute. We're going to talk about prepaid cards and government payments, about the electronicization of payments, about the end maybe of the paper check, and what does it mean for vulnerable populations, for low-income people, for people who receive benefits from the federal government. We're joined today by a series of speakers who are going to talk about their perspectives from government, from industry, and from policy about the role of prepaid cards in the role of government services. I'm going to hand off today's webinar to Jean Hogarth, who is the Vice President of Policy for the Center for Financial Services Innovation, or CFSI, our co-host for today. We've known Jean for a long time and has been a great supporter of the Center for Financial Security. She formerly was a division chief at the Federal Reserve Board and a professor at Cornell University. So thanks to all of our speakers for being here today. I will be back to coordinate some question and answer towards the end, but I'm going to hand it off to Jean. Thank you.
Great. Thank you, Michael. And could you go to our first slide with the pictures? I'd like you to meet Alice and Mary. Both of Alice and Mary are single moms who get food stamps, child support, TANF benefits. These are loaded onto a prepaid card. Both use their cards to buy groceries, to get the kids new shoes, to pay bills, to get cash, which they usually get as a cashback with purchase so they can avoid ATM fees. But Alice's card lets her track her purchases so she knows how much she spends where. It has a savings bucket so she can move funds out of sight so she can save up to buy those back-to-school clothes for the kids. And she can access online personal financial management modules to help her build her financial skills. Mary's card, on the other hand, is plain vanilla. But in this day and age, you can do more than just plain vanilla with prepaid. You can add sort of the fudge sauce and sprinkles, if you will. So you can go beyond the basics to provide better, higher quality products and services. So this is what Prepaid 2.0 could be, and I'm on the next slide, where government payments do double duty. Most states have adopted electronic benefit cards, EBT cards, as a cost-saving measure, and that helps them reduce lost check and fraud losses. But in a new 2.0 mode, EBT cards can also benefit consumers with increased choices, expanded functionality, and improved financial capability. And that's what we're about today. Next slide. Our objectives for today are to help increase awareness of how benefit cards function and their potential for helping consumers improve their financial health, to inspire greater adoption of the principles of expanded choice, increased functionality, and improved financial capability in the financial payment space, and to really help move the needle from a mentality of payments cards save states money, which they do, but to a thought process of payment cards can help state citizens manage their financial resources and improve their financial health. Next slide, please. Our goal, our hope is that as a result of today's webinar, we will see increased coordination within state agencies to offer expanded choice, functionality, and improved financial capability. We'll see some collaboration among community leaders and state benefit providers to bring resources and expertise to develop this next generation of payment system. And we'll see collaborations between researchers and state partners to enable more research-driven policy development. Next slide, please. I am really thrilled with our speakers today. We have just been able to get together the best blue ribbon crew possible. Ron Crane is treasurer for the state of Idaho. He's responsible for the management of both state and local government investment pools. He directs the receipt of all state monies, manages the accounting and disbursement of public funds, and invests the general account and pooled agency cash to produce non-tax revenue for the state of Idaho. Prior to his election as treasurer in 1998, Mr. Crane served 16 years in the Idaho House of Representatives, and while there he chaired the State House Affairs Committee and the Business Committee. He's received the Guardian of Small Business Award and the Legislative Champion of the Family Award. Arlen Davich is the founder and CEO of PayPerks, a financial capability and rewards platform for low and middle income prepaid cardholders. PayPerks was recently named the most promising new idea for the emerging middle class, a best newcomer in payments, the next big thing in prepaid, and a company to watch. Prior to founding PayPerks, Arlen worked in various facets of the consumer engagement and marketing companies, including Louis Vuitton, Time Incorporated, Rubenstein Public Relations, and Danon. Arlen was the winner of the 2009 Lang Fund for Entrepreneurship at the Columbia Business School, where she conceived the idea for PayPerks while receiving her MBA. J.D. Donaldson is the Vice President of Public Sector Strategic Card Solutions at Xerox, a provider of diversified business process and information technology outsourcing solutions to commercial and government clients worldwide. In her role, J.D. manages a team of subject matter experts who develop and support card solutions for federal, state, and local public sector clients. Ms. Donaldson and her team support the EBT, electronic payments card, the electronic benefit transfer cards, electronic WIC cards, and electronic child care cards for more than 30 states and also the federal government. Hans Kuttner is a senior fellow at the Hudson Institute, working on the Institute's Future of Innovation initiative. His career spans policy and research work. During the presidency of George H.W. Bush, he was part of the White House domestic policy staff with responsibility for health and social service programs. Most recently, he was an associate at the University of Michigan's Economic Research Initiative on the Uninsured. He's also worked for the federal agency that runs Medicare and Medicaid and has advised the state of Illinois on restructuring its human service program. So with that distinguished cast of characters, let me turn briefly to a description of why CFSI is interested and involved in this space. And Michael, now I'm on slide 7. Several years ago, CFSI identified 4 key principles. We call them the compass principles that really guide all the work that we do in helping underserved consumers access and use high-quality financial products and services. Those 4 key principles are to embrace inclusion, build trust, promote success, and create opportunity. In using those 4 key principles, we have dug deeper into some product lines to say, what does this mean, particularly in the prepaid space? So on the next slide, you can see some of the resources that we've developed, and we ask basically, what does it mean for a prepaid card in our Compass Guide to Prepaid? What does it mean for a prepaid card to embrace inclusion, build trust, promote success, and create opportunity? We've also done some thinking about thinking inside the box, looking at how prepaid fees are disclosed. And interestingly, the CFPB is actually picking up on this and looking at consumer testing of prepaid fee box disclosures to help create a standardized disclosure for the fee box. And hopefully we'll see some outcome of that research in the spring of 2014. CFSI also teamed up with the Hudson Institute to develop the white paper called Double Duty Payment Cards as a Doorway to Greater Financial Health, in which we actually do a deeper dive into the government prepaid card space. Next slide, please. Government electronic payments have been around for a while. This is actually not anything new. It goes back to as early as 1974, when direct deposit was really established for Social Security benefits. In 1996, legislation was passed that established the electronic delivery of food stamps. then now called SNAP, the AFDC, now called TANF, and EFT 99 was established to allow for direct payment of other federal regular federal benefits. In 1999, Treasury made electronic transfer accounts available. In 2005, they promoted the Go Direct campaign, and the Direct Express card was made available in 2008. And as many of you know, in spring of this year, March 1st was the deadline for all federal benefit payments to be paid electronically. So that's sort of the timeline for the past. The question is, what does the future hold for us? What does it mean when I talk about increased choice, expanded functionality, and improved capability in future federal financial prepaid products? And with that, I'm going to turn to Hans Kuttner, if we can go to the next slide, who is our partner on the double duty paper, to kick us off and talk about what it means for going digital government payments and the payment system. So Hans, I'll turn this over to you.
Thanks, Jean. We at Hudson have a long-standing interest in how technology changes the way we live. And I want to start off with slide 12 about some very concrete examples of what I'm talking about. In the past, financial transactions involved something physical. Cash, checks, food stamp coupons are ways to make financial transactions that depend on paper. The technology that faces the consumer is the cash register. Now, in the digital world, examples of digital formats for the same transactions include direct deposit and plastic cards. In digital transactions, the technology that faces the consumer is the point of sale terminal. Moving on to the next slide. While the technology that's closest to the consumer may be the cash register or the point of sale terminal, there's a lot of technology upstream from us consumers. These technologies typically involve networks. Automated clearinghouses made it possible for billions of paper checks to disappear. Rather than paper checks, transactions take place through data networks. ACH is the technology behind direct deposit, my utility bill getting paid automatically every month, and when I go online and pay my credit card bill. Another kind of network is an open-loop payment network. The best-known examples are the networks that consumers use through credit and prepaid debit cards. I like to think of these as being like the Internet. Anyone connects with anyone to make payments. I can have a card issued by a local financial institution, but I can use that card on the other side of the world to make a payment with a local merchant there. Then finally, closed-loop networks aren't open to everyone. In the public sector, state governments use these type of networks to support electronic transactions in the SNAP program. Now, moving on to the slide about the evolution of this, Jean sort of gave us a bit of history. With the public sector, at the federal level, Social Security first offered direct deposit as an alternative to paper check in 1974. And within a generation, the majority of payments in that program had gone digital. The then food stamp program began with paper coupons. The cost, complexity of handling all that paper made moving to digital quite attractive. The federal government pushed states. Between 1993 and 2004, every state made the transition. If you wanted to get the food stamp benefit, you had to understand how to use a payment card at a POS terminal. That was it. Now, moving on to our next slide about prepaid debit. Direct deposit works for people who have bank accounts, but lots of government payment recipients do not. How could they become digital? The development in the financial services industry made that possible. The introduction of prepaid debit cards allowed making digital payments to people who do not have bank accounts. The card functions as the account. Prepaid debit has driven out paper checks in public programs. On the payer side, direct deposit and prepaid debit operate the same way. You send a file to your bank, you list the bank accounts, the account numbers for those payments. Some of those numbers are going to be checking accounts, some are going to be savings accounts, some are prepaid debit. State and federal agencies have created relationships with financial institutions to issue a default card to people who do not offer bank accounts to send their payment to. Now, that relationship does not preclude others from saying, hey, I already have this prepaid card. I want to use my prepaid card that I already have from some other issuer. I want to use that. And
okay, not worth it.
Space for others to pay for profit community organizations to introduce some alternative products. Now, moving on to another slide. But with the state. State programs really went first in this area. State-administered programs, they pushed forward with prepaid debit faster than the Fed. And what was motivating? Why states could shed costs to merchants who paid interchange fees. We surveyed states last year to find out about payment options for 3 large programs that dominate payments going directly to individuals: unemployment compensation, child support, TANF. Except for a handful of exceptions, all states require those who cannot or do not want direct deposit to bank accounts to use prepaid debit in all those 3 programs. So, onward to my last slide. Where are we? Where do we go from here? Gene alluded to the electronic payments 1.0 and 2.0. What do we have now? We have 1.0. It's a digital world, and in this first digital world, digital makes a one-for-one substitution for paper, substituting one function for another. We see a few value-added services. The prototypical service is a low-balance alert text message. The user says, hey, send me a text message when my remaining balance flows below X dollars. Tomorrow we see electronic payments 2.0. What are the kind of features of this? A lot of it's going to be built on mobile telephony. Mobile telephony has the potential to remake the user experience. Thus, this heading, thus, there's an app for that. It isn't just text messages, but it's also the potential for real-time feedback. Hey, you're spending more than you wanted to today. Or, hey, would you like to round up 23 cents? Round up and put 23 cents in your savings bucket? These are the technologies that have potential for delivering sophisticated financial coaching. We'll hear more about that in a bit. It's also easier to offer financial structures and arrangements that support financial behaviors that a consumer wants but finds hard to accomplish. Putting some money away in a hard-to-get place, getting most of the money in the beginning of the month, and knowing that there's going to be a little bit more at the last of the month. I think the possibilities in electronic payments 2.0 are staggering. I look forward to seeing what consumers want. Thank you.
Thank you, Hans. I really appreciated that kind of background and framing. So far you've heard from me and Hans, and we're sort of both think tanky people, but now we're going to hear from Ron Crane, who is where the rubber meets the road. He's the guy that actually has to administer these programs. Ron, I'll turn it over to you.
Okay. Please go to slide 19. Well, good afternoon. My name is Ron Crane, and I have the privilege of serving as the state treasurer for the state of Idaho. I was first elected in 1998, and since then I've had a front row seat in observing the dramatic advancements in technology and infrastructure that have changed many of the ways those of us in the public sector serve our constituents. I appreciate this opportunity to talk with you today about one of these innovations, the electronic payments system, and why it is so important to leverage this advancement to the benefit of everyone that we serve. Next slide, 20, please. State governments administer a number of programs using electronic payment systems to disperse funds to their constituents. Electronic payments are used for programs such as unemployment insurance, child support, tax assistance for needy families, and increasingly personal income tax refunds. Next slide, please. Electronic payments have been a significant benefit for Idaho. From our perspective, electronically distributing benefits and payments has been much cheaper, more efficient, and certainly more secure than through the traditional route of issuing checks. When I first took office, we were printing or processing approximately 150,000 checks per month. As you can imagine, electronic payments have eliminated many of the costs associated with these checks, such as the cost of paper, the cost of printing, mailing, and the actual handling of the checks themselves. And as you are aware, every time that check is touched by someone, there is a cost associated with it. It has also generated significant benefits for Idaho's citizens, benefits which are available to everyone who is provided with electronic payments, such as prepaid cards and debit cards. So let's talk about some of those benefits. Next slide, please. In the public sector, prepaid and debit cards are quite simply the best way to distribute funds to those citizens who receive public benefits. For recipients, the advantages of cards over cash or a hard check are numerous and can best be described in terms of convenience, security, and financial inclusion. Next slide, please. For many Americans who use prepaid cards, the word convenient does not begin to describe how life-changing the receipt of their benefits on a prepaid card can be. Using a prepaid card gives recipients faster access to their funds without having to wait for the mail and then go to the bank or a check cashing service for cash. This allows many beneficiaries to save precious time and resources previously spent trying to gain access to those funds. Prepaid cards allow other vulnerable populations like seniors and those with disabilities to have access to funds without leaving their home. All benefits can be paid through one card, simplifying cash management. And lastly, all cards are equipped with powerful financial literacy tools that can help the beneficiaries manage their accounts and track their expenses. Slide 24, please. Prepaid cards are safer than cash. They come with the same security, fraud, and protection features as every other credit card. For example, we can put a hold on the account, recover the stolen money, and then reimburse the recipient for any fraud that has occurred. In 2008, more than 485,000 Social Security and SSI checks were stolen, and another 72,000 were delayed. Distributing benefits through prepaid cards protects the beneficiaries and the taxpayers from fraud and theft. Slide 25, please. A 2009 study by the FDIC, Federal Deposit Insurance Corporation, reported that roughly 1/4 of U.S. households are either unbanked or underbanked. Prepaid cards provide beneficiaries with financial inclusion. Now, financial inclusion means different things to different people, but the goal is still the same, and that goal is to create an environment wherein financial instruments are available for all, where efficiencies, security, value of one's time, and cost effectiveness become the standard, or the norm, if you will, versus these products and services being available for only the wealthy. This is a pursuit in which government and the private sector can partner together to make happen. Many recipients are unbanked, leaving them vulnerable to high check cashing fees and payday lenders, which we all know does not serve them well. Prepaid cards enable unbanked beneficiaries to shop online, pay bills online, and make purchases in stores just like those who participate fully in the banking system. This gives them more buying power and more choices when making their purchases. The dignity of having access to a card is significant. Prepaid cards open up a whole new world for people who may have been isolated by having access only to cash. Slide 26, please. Our experience here in Idaho has demonstrated that we all benefit from converting to electronic payment systems. An electronic payment costs approximately 10 cents per transaction, while a paper check costs approximately $1.03 to issue and to mail. It's also important to point out that the private sector companies can innovate and create solutions to challenges with the electronic payment system at a very fast rate and a low cost. These companies are motivated to make the system faster, better, and less expensive. And this aligns perfectly with the public sector's desire to serve beneficiaries, while at the same time conserving tax dollars. I will be happy to respond to any questions about the benefits of prepaid cards or about my experience with electronic payments in Idaho at the conclusion of the presentation. Thank you.
Thank you, Ron. I really appreciate your perspective there. It's nice to hear that that you're thinking about bundling the whole issue of financial capability in with the delivery of the benefits. That's just great. We move on now to J.D. Donaldson, who, is, as I mentioned earlier, is employed with Xerox. They're a payment processor. And J.D. sits in a place where it enables her to see some really interesting opportunities for the future. So, J.D., I'll turn it over to you.
Well, thanks, Jean, and many thanks to you and Michael for having us here today. As Hans talked a little bit earlier, Payments 2.0 is what we're all thinking about in the industry, and how do we be better, faster, stronger, and think about the recipients and move them in a way that has best practices. On slide 29, we've talked a little bit, and just to recap what Hans and some of the others have said, we've got great history. We started in the 90s when EBT, or food stamps, also called SNAP, moved to a prepaid card. Now, granted, it wasn't a branded card like you or I may have in our wallet. It's considered a closed-loop card, but it started the ball rolling. In the 2000s, all of our open-loop card programs really took off, and we're seeing child support and unemployment, to name a few, move into that world. And looking ahead, we'll see WIC, Women, Infant, and Children, who has an electronic mandate of 2020, also start picking up speed. The benefits we've talked about clearly are those for both states and agencies, as well as for cardholders. And one we've not mentioned here that is important is these cards and the programs really enable our state and department personnel to be reallocated. Those resources now can help the program with other needs, ultimately helping the recipient. So if we flip to the next slide, this is a map of Xerox's programs. So all of our open loop and closed loop programs that we support today, they're color-coded by open loop, in this case EPC, or electronic payment card. Purple is our closed loop, or EBT SNAP card. We also support a time and attendance program for e-child care, so time and attendance to making sure that child subsidies are taken care of. And then again, emerging in the WIC area are gray. So this is color-coded, again, just the programs that we support at Xerox. There are other contractors out there who have cards also in these states and in states that we don't represent. I do want to go a step deeper. On the next slide, you'll see specifically our open loop programs, or that branded card, generally with a MasterCard or a Visa, that we support throughout the nation. So at the bottom, you'll see the states and the programs spelled out where we support individual programs in that particular state. So I'll point a couple of states out to you and kind of see the evolution. Starting down in Florida, you'll see the number 2. So we actually support both a child support and an unemployment insurance program in the state. Now, for reasons between the agencies, they chose not to use the same card. So a recipient who may be receiving unemployment insurance as well as payments from a non-custodial parent may be carrying 2 cards in their wallet. Flip that with Mississippi, who is got 3 programs: unemployment, child support, and TANF, which is temporary and needy family assistance, sometimes on a closed-loop card, has actually migrated to an open-loop card. And there's a single card supporting all 3 of those programs. Similarly, in Virginia, they started off with child support, TANF, unemployment, and state payroll, all on a single card. In 2011, we did add a second card to that program, a second open-loop card or branded card that's now supporting tax refunds. And then you take it to Oklahoma. So on this chart, on this page, you'll see that there are 3 over the state, but there are many more than that in the programs listed by Oklahoma. Oklahoma is really advanced in adding multiple programs on a single card. So a lot of the department, DHS's programs are on a single card. Unemployment was a second, and then again a recent addition of tax on the third. So if I go back on the next slide to that original map that you saw where we supported all of the programs, this is an overlay of the physical number of cards a recipient may have in their wallet should they get disbursements from the Xerox programs that we support. This does, again, not count contractors' other programs that may also participate in the state and the number of cards that really could be in a person's wallet. So we are seeing a great amount of electronification for benefits and payments in the public sector space, but still a large number of cards. I do want to take you to the last slide of my presentation, and we're going to take a little bit of a deeper dive here. So what's next? What is coming in 2.0 for the innovation of payments? Multiple programs on a single card. Now, they don't all have to be open-loop programs. I'll give you a unique example. Back in Oklahoma, they actually have both EBT benefits, known as SNAP, as well as e-child care on the same closed-loop card. That's an innovation. The state needed a way to take care of those customers, but they wanted them to have the convenience of a single card. New agencies are now looking at a card as a disbursement capability. Some advances in behavioral health programs, higher ed, corrections are seeing the card or a card as a way to handle supports for their recipients. I do want to challenge those of you who come from a state or an agency here. Don't be shy. Nobody knows what you need other than you. Again, take that example in Oklahoma. They knew they needed to serve those constituents in a better way, both for the providers taking care of the children, plus the peace of mind for the parents who were using those services. We are happy to sit down with anybody on a state and say, what is your challenge? What do you know about it? And let us help you find a way to disperse programs using a card. A change that we're also seeing in the states and expect to continue is now states and agencies are underwriting cardholder expense. Historically, the programs that are open loop or branded have been at no cost to agencies. We're seeing a shift. A lot of that is because states and departments are hoping to have more free transactions. And these programs aren't free. I hate to break the bubble there. There are costs, just as there were hard costs for issuing checks, there are those same things for contractors supporting this program. So we're seeing agencies willing to participate in that cost so that recipients have more access or new features at low or free cost. And then finally, we're starting a migration from closed-loop cards to open-loop cards. Technology is advancing. We're actually getting down to the SKU level of items, the product code, and we're going to see those advancements here more in the near future than I think any of us expected. This will be exciting, particularly with SNAP programs as we migrate over to new technology. So what's next for cardholders? Enabling a saving option within the program. I heard Hans talk about this a little earlier. Being able to set goals and meet them, the card accounts can enable that to happen. New rewards for additional savings. How can we help that card actually be more than the disbursement amount given? Coupons are a perfect example. Optional value-added services. We've talked about cardholder alerts, but what other offers can we give them? Maybe it's things that you expect already with your credit card company, such as purchase protection or roadside assistance. But this is where I'll also challenge the state. Traditionally, we have not been able to allow these types of benefits to cardholders, somewhat creating a second-class citizen compared to those who get direct deposit. We would like to be able to enable those features to cardholders who receive prepaid cards as well. Finally, financial education is so very important for this population as well as all the recipients that we support. Promoting best practices, strong budgeting tools are really important. We've been fortunate at Xerox to work with PayPerks in our Direct Express program and talk about financial education. And with that, I get to turn it over, I think, to Arlen.
Thanks, JB. So it's been great that all of our presenters so far have teed up the power of prepaid in order to promote financial inclusion, simply the card itself. What PayPerks aims to do is really go beyond that and layer on an additional, turn government payments into a teachable moment and use that connectivity with the consumer to drive increased financial education and financial capability. So on slide 36, PayPerks is a financial capability and rewards platform for low and middle income consumers. Slide 37, we combine cardholder education with sweepstakes-based incentives, and we deliver that through a web and mobile delivery model to drive behavior change that's positive for consumers. And the way we define positive behavior change on slide 38 is helping cardholders minimize fees, maximize convenience, maximize safety and security, and maximize or promote financial empowerment. So on slide 39, the easiest way to think about PayPerks is a rewards program on a prepaid card. A traditional rewards program on a piece of plastic rewards cardholders for spending more. So for every dollar you spend, you get points, and it rewards them with something incremental to their spend. So let's say for every $100 you spend, you get $1 or $2 worth of either cash back or points towards merchant-funded discounts or airline miles. We had the insight that that model shouldn't apply to underserved consumers for several reasons. One is it's a perverse incentive to incent somebody who's not making a lot of money to spend more, so we don't want to incent on dollar volume. And two, incremental-based reward schemes tend to not really resonate with this segment of consumers. We know anecdotally from our work in New York City and around the country, but also from many academics in the space, that low-income consumers tend to be more motivated by chance-based games than by incremental reward schemes. And that behavior trend manifests itself today in the United States in things like the lottery, where per capita lottery spend is $200 and dramatically over-indexed by low-income consumers. What we do at PayPerks is we use that insight to, again, drive behavior change that's positive for the consumer. So compared to a traditional rewards program, we're different in two main ways. One is what we award points for, and the other is what those points are worth. So on PayPerks, users can earn points by, first and foremost, engaging with an educational curriculum that we've developed. It's illustrated, it's modular, it's multilingual, and it covers a range of topics, from the most basic topics about what is a prepaid card, how do I use it at the point of sale, how do I minimize fees on that card, to more general financial literacy topics like how do I think about starting a savings fund, or how do I think about creating a budget. So users get points for engaging with our content and demonstrating that they've retained the information in two ways. The first is at the end of the module, they get 2 questions, and for each question they answer correctly, they get points. The second way they close the loop on that behavior change is they can get points for actually engaging in those behaviors and demonstrating that they're actually using their card in ways that minimize fees and maximize financial capability outcomes. The other difference is what those points are worth. So every point earned on PayPerks, rather than be worth something incremental to the spend, is worth a chance to win a cash prize. So all of the points you earn through the education and through the usage behaviors, they get aggregated into your points account. And then at the end of the month, we run hundreds of sweepstakes, ranging from $1 to we cap the prize value in the public sector at $50 as not to affect people's eligibility status. And it's essentially a weighted entry cash sweep. Every point you've earned is worth a chance to win one of those prizes. We notify you when you've won. You log into our web or mobile site to claim your prize, and it's loaded directly back onto your card, creating a virtuous cycle. So if you look at slide 40, you'll see an illustration of what this looks like. So typically we market to cardholders through marketing material that looks like scratch and win tickets, designed to be very engaging. We do those as inserts into card fulfillment packs. We can do standalone postcards that go in the mail. We've done integrations on program managers' websites, and those actually drive a lot of traffic and a lot of enrollment in the program. There's many other tactics that we use, but the purpose of that collateral is to drive excitement about financial education. That scratcher, the unique scratcher code that's delivered on the scratcher, allows somebody to create a PayPerks account. And from there, when they create a PayPerks account with that code, we know what program they're on. We know where they are in the card life cycle. Oftentimes we know what language they speak. And it allows us to customize or curate their experience on the site depending upon where they are in the card life cycle and what education and usage points would be most relevant and actionable. And you see on number 4, that's a look at what the prizes look like. As I mentioned, every month we give away hundreds, if not thousands, of cash prizes, and we also give additional points prizes to encourage excitement to come back in the next month. So on slide 41, as I mentioned, when you use a specific scratcher code to create your account, you unlock content and points earning opportunities that are specific to your card program. So right now we're working on the Direct Express program, for example. Direct Express is the Treasury's program for Social Security benefits disbursement. On that program, we haven't yet, the educational content focuses on, for new cardholders, we're focusing on what is this card, how is it different than a credit card, security measures, you should be signing the back of the card. Whereas on a food stamps program, we might educate folks on how to get the most for their nutrition dollar, how to read a food label, what's the benefit of whole grains, etc. So this is all very customizable, and we work with both the program managers and the governments to make sure that both the education and the points earning opportunities are relevant and actionable. On slide 42, so as JB mentioned, we rolled out on the Direct Express program last April. It's been really phenomenal, the results, and how much people are engaging with the platform, not only how many users are signing up, but also how many educational modules people are consuming once they do sign up. So since April, we've had more than 150,000 cardholders sign up for PayPerks. And this month we will hit 1 million modules consumed. That's over 6 modules per cardholder on the platform, which is pretty phenomenal. 82% of our users, the PayPerks users, report that PayPerks has helped them make better financial decisions. Of course, the ultimate measure of our success is whether we actually can see that in their cost savings, and we're working with all the partners involved in that program to be able to evaluate that more closely. So looking at slide 43, so 2013 was really about getting live on Direct Express, and it's I think it's the largest prepaid program in the world, or at least to my knowledge, it's one of the largest in the world. We worked with a lot of partners who were very supportive in getting that live. So the Treasury is the payer on that program. Comerica Bank is the program manager and issuing bank. Xerox is the processor, and MasterCard was the brand. And it was a Herculean effort on behalf of all of those partners to get PayPerks live on that program. We learned a lot in the process, and we are now, our team has grown tremendously over the past year. We have a lot of best practices in place, and we look forward to rolling out on more state programs in 2014. So what that means is child support, unemployment insurance, TANF and SNAP, and even tax programs. So the reason I have that corny icon in the bottom is we're working with several program managers who are already operating programs in many states. And if you're a state government person and you think this would be something that your state would be interested in, I encourage you to reach out to me, and we can triangulate and see how we can make this happen in your state. So on slide 44, you see my contact information. Don't hesitate to reach out if I can be of help. And with that, I think we can turn it over to Q&A.
Great. Thank you, Arlen. The innovation and excitement and the opportunities in this program just continue to really intrigue me. So now I guess I'm going to bump this back to Michael and ask if there are any kinds of questions from the participants on the webinar.
Great, thank you. And thanks to all of our participants today for being here. We have about 358 people registered today, and a large number of questions are coming in via the chat section on the media site. So feel free to type your questions in, and I'll try to route them along to our guests as I best can. I had a couple of just clarifying questions that I might start by throwing out to either Hans or JB. One is just, can you help us again understand the difference between these open and closed loops? I think those terms have been thrown out and they're new to some of us. So can you help us understand those distinctions?
JB, you want to take that one?
I'll be glad to. So closed loop, when you're talking to most of us in the industry, tends to be a card that you can use with a limited set of merchants and for limited purchases. So think of it as an old-fashioned store card. So if you got your Macy's card, you could only use it at Macy's. So for public sector programs, things like WIC or EBT, you can use it only to purchase items that those programs allow and at retailers or merchants that are approved. So if you were getting SNAP benefits on a closed-loop card, you're only supposed to buy food items, say, at your local grocery store. Open loop is also synonymous with unrestricted or branded. So if you're getting a child support payment, for example, or an unemployment insurance benefit, there are no restrictions on how you can spend those dollars. So just as Hans said earlier, you may have your card from your local bank, but you can use it across the country. The same thing with an open loop public sector card. You have a branded MasterCard or Visa that you can make any type of purchase at usually any type of store. Does that help?
Great. I had a follow-up question on that, too, regarding WIC, because within a grocery store, some items might be eligible for WIC and some might not be. So how does that happen for a consumer if they walk up to the counter and they have something that's not eligible for WIC and they try to use this closed-loop card?
Yep, so great question. Whereas SNAP benefits or TANF benefits on a closed-loop card are generally a dollar allocation a month. So you may be getting $200 a month in your SNAP benefits to use at a SNAP retailer for food items. WIC is even more restrictive. So WIC is actually prescription-based, and every state has a specific prescription. So in Georgia, I'm located in Atlanta, I may get this month 2 gallons of milk, a thing of formula, and a box of cereal. If I were living in Florida, I may get 1 gallon of milk and maybe 4 boxes of cereal. And if you guys are from the state, forgive me for my horrible example. But the WIC items, generally when you walk into, say, your local grocery store, will have a tag hanging from the shelf that says, this item is WIC approved. And that does vary by state, and it's based on the prescription or the benefits you get based on your program eligibility.
Great, thank you for that. So the other question, and this may be for Ron or JB, is how do the fees work? It's got several questions here about what does the consumer pay and what does the state pay? We heard about the sort of cost of the contractor. And for the consumer fees, how do those fees work? Are they charged by transaction or by deposit or withdrawal, and how does that happen there?
Go ahead, JB.
Oh, thanks, Ron. So generally, the EPC programs, open loop programs, have been at no cost to the state. And with the procurement, the state asks for certain requirements, and generally we try to have, as a contractor, as many transactions that are at no cost or very low cost for a cardholder. So if you were launching a program today, and we'll again pick the state of Georgia, say it's for child support, the agency is not paying that contractor for the program. But cardholders are provided with their card terms and conditions, generally at what we call a card carrier that will outline the fees that are applicable in that program. So while most fees for everyday purchases, like point-of-sale purchases at retail locations or over the Internet, are generally at no cost, there are fees that may incur a fee to the cardholder, and that is deducted from the available balance that is loaded to their card. So let's say I received $300 this month, and I went and made a purchase at Kroger. Generally, there's no fee for that. Let's say I went to an ATM and withdrew some money. Generally, most contractors provide a certain number of ATM withdrawals for free, but after that prescribed number, then there may be a fee charged. What I think most people don't realize is a contractor, we are charged for all those fees. So every time you go to an ATM or every time you go to a teller and withdraw funds, those are hard costs for contractors to absorb. Ron, anything you want to add?
No, I think you covered it well.
And this is
Hans.
Hans.
Go ahead, Hans.
This is Hans. JB, I think, is this right that the extent of those number of free ATM transactions are largely going to depend on the willingness of the state to maybe put dollars at risk?
Yes. So there have been, like I said, recent procurements were having agencies actually participate. So the programs are maybe not 100% free to the states or the departments anymore. They're actually participating with a fee to the contractor so that more transactions can be free to the recipient.
And so for those who might be out in the advocacy world who are participating in this webinar, if you're concerned about the number of free ATM transactions, your state has the ability to make that choice.
And so this is Jean, and I just want to make sure that the listeners understand that, when a state decides that they're going to, put out a contract for a card, they get to write what features and details they want on that particular card, and then they open it up for bid. And so contractors like JB and others will actually go out and bid on providing the services to the state of Wisconsin, to the state of Idaho, to the state of Georgia. And so the idea is that the contract ends up being with the state. And as Hans just said, if you're in the advocacy community, the opportunity to talk with people in the state agencies to better understand how those RFPs, requests for proposals, are written would probably be a good use of your time.
Great. So I have a question from somebody who has an advanced understanding of how these cards work, and they were asking about the Oklahoma example. And their understanding was that the card there is used not only to disperse cash, but also to track attendance at child care centers and then be used on that basis to reimburse the child care center for that. Can somebody verify that the cards are actually being used for more than just payment dispersal in that case?
JB, and I absolutely can confirm that. So there are a handful of cards in Oklahoma. Again, our closed-loop card has both EBT, those SNAP benefits on it, and it's used for electronic child care, or we call ECC. So I can take my card, I can go to my retailer, and I can buy approved food items according to that program. I can also use that card if I have a child who's receiving subsidized child care. I can go and when my child is being dropped off at a provider, I swipe my card to check in my child. At the end of the day, I swipe so my child comes home with me. And because we are tracking that swipe in and swipe out of the child, we're able to pay the provider for children who actually were in care for that month. So the card does two sides. It helps the parent not only buy food purchases for SNAP benefits, but check in their child. It also lets us track that to help reduce fraud, waste, and abuse for paying those vendors who are providing child care.
So can I ask a follow-up question, JB? And this was intriguing to me. In one of your slides, that you showed that Louisiana has some sort of biometric ECC. Can you talk a little bit about that?
I can. So that same example of where we use a card to swipe in a particular child or children, Louisiana chose to do that through biometrics. So through handprint, we actually now, somebody goes and places their palm, and then the child is checked in. At the end of the day, the child is checked out using the same process. So instead of a card, the state has moved to a biometric solution.
So related to that, potentially, I have a couple of questions about fraud, benefits fraud, where people maybe qualify for a benefit, receive a benefit, but then somehow transfer that benefit to somebody who's not authorized. So that I guess the classic example would be selling your food stamps. Does this movement to the cards, either closed loop or open loop, help remedy that problem?
Somewhat. But not entirely. We're always working with our state partners to help fraud, waste, and abuse. That has to start at eligibility for those actually receiving benefits, and then those of us who support the ecosystem throughout have to continue to work on making sure the card is in the hands of the person who is supposed to and are not selling it, say, for example, on Craigslist, and then also the retailers accepting that card are not doing things that they shouldn't. So it is really a multi-pronged approach to try to watch and reduce fraud, waste, and abuse.
So I have a question, I think, for Arlen about the pay perks model, and how does this work for a client that maybe doesn't have internet access, or do they do this through their mobile phones? How do you think about this for people who don't have a high-speed internet at their house?
Yeah, so Pay Perks is available on any computer or mobile device. We're finding right now about north of 30% of our users are coming exclusively from mobile, and it's a very good mobile experience. You don't need an app, you don't need a smartphone, you just need a phone that's enabled with internet access. We understand that there are people that don't have internet access, period. We are finding a lot of people are coming from shared computers, and right now we don't have a solution for people that don't have access to internet at all.
So I have another question about fees. Can either Ron or JB just talk about what the average monthly fee would be? Just not looking at the extreme cases of people who really got into trouble or people who barely use their card, but what's kind of the average fees that we'd expect to see a consumer with these cards paying?
JB,
I had the last one. This is yours, Ron.
Well, I don't handle that side of it, so I really don't have any information that I could add that would be a benefit.
Okay, so I'll take a stab if you want me to, Jean.
Well, let me just jump in before and give you a time to breathe and think a little bit. Let me just talk briefly about the direct express fees. So first of all, you get one free ATM withdrawal each month with each load of your and these are monthly benefits. Remember, direct express is Social Security, SSI, and Veterans benefits. You can use it at point of sale for free. You can get cash back with purchase for free. You can sign up for automatic deposit notification and automatic low balance notification, and those pings come in free. You can access information on the web or the internet or on a smartphone for free. There's free ATM balance inquiry. Their customer service calls are also free. You can walk into a bank and get cash back from tellers for free. So the fee structure on the Direct Express card is really user-friendly. Now, JB did mention that sometimes there's a limited number of ATM withdrawals, and then anything over that, there's a fee. And with the Direct Express, it's a 90-cent fee for each additional ATM cash withdrawal after the first free one. If those people who really want a paper statement, you can get a paper statement. It will cost you 75 cents. So that's kind of the fee structure that you're looking at.
And Jean, you had mentioned the proposed fee box from the Consumer Financial Protection Bureau that we might be seeing more of next year. Can you just fill us in a little bit about what the goal of that is and how that might look?
Right. So this is really interesting. Giving people information about the fee structure on prepaid cards is very difficult because you don't know the channel that they're coming in from. If you're on the internet at your home PC, the screen real estate is however big your screen is, and you can scroll through the pages and you can look for the different fee structures. If, on the other hand, you're in a retail store and you're looking at the wall of cards and you're trying to pick out a prepaid card, the real estate for finding the fees is very, very limited, and therefore the fee information may be very, very limited. So what the Bureau is going to be trying to do is identifying the fees that are most salient and most important to consumers, and then figuring out a way in a lot of different channels of delivery to present information about those fees. CFSI, when we did our prepaid fee box disclosure model form, we looked at how you start up the card. We looked at big categories: how you start up the card, how you add money to the card, how you take money off the card, how you query about how much money is left on the card, or other sort of balance and spend alerts, and then finally customer service. So I think if you can think about some big categories of transactions and then think about the separate fees that might occur within those categories, that may be the start of the way the CFPB is going to be looking at that. Another interesting situation that's happening here, there's another organization in town that is looking at designing a fee box that would enable people to compare a prepaid card with a checking account, because the theory being that those are the two products that you might be comparing and making trade-offs against. So think about how prepaid fees might look like the kinds of fee disclosures that you get with your checking account. We won't see that proposal until sometime in the spring, and then it will just be a proposal. There will be about probably 60 to 90 days for the industry to comment on that. And my best guess is that you won't see that rule go into effect much before 2015.
Great. Well, we're starting to run out of time. I want to thank all of our speakers for sharing their expertise today. This is obviously a very important topic, and one that's sort of flown under the radar for a lot of people who do look at state programs, who look at vulnerable populations, and one that I think we've learned a lot about today. So we really appreciate all of your time in helping us understand where we're at. A few people had sent texts about where they can receive more information about this topic, and the Center for Financial Security at Wisconsin has a website, the website potentially where you signed up for the webinar today. So you can certainly check out the cfs.wisc.edu website. I also want to remind folks that these webinars are all archived and hosted on YouTube. You can get to them through our website as well as at on YouTube under the issuer or the author of UW-Madison CFS. So those are available if you need them. The information for Gene Hogarth and I are on the next slide. And I do want to let people know that there will be another webinar in January 14th, on a field experiment we've been working on with credit unions across the country, which rewards subprime borrowers for timely loan repayment. So put that on your calendars for noon Central Time, January 14th. But again, let me thank Gene. Gene, I'll let you have the last word, and thanks to all of our speakers as well.
Well, thank you, Michael. It's been a terrific hour. Time just flew by. I also want to extend a sincere appreciation to Ron Crane, Arlen Davich, J.B. Donaldson, and Hans Kuttner for taking time with us today. And so thank you all very much.
Thanks, everyone.